Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, December 21st, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend since the follow-through days on November 1st and 2nd. You can see we've got the four green arrows, the much coveted four green arrows on the trend gauge, reflecting leadership acting very well. And then we track the five major indexes across three time frames: the 21-day exponential moving average, 50-day medium term 50-day moving average, long-term 200-day moving average. All five of the major indexes trending above those key moving averages. So we got the three green arrows for the market. And what happened today after a really harsh sell-off yesterday, an elevator down type day, out of the blue in the afternoon? Reading a little bit more about it, there were some very strange daily index expiration trades, as well as VIX rollover, that may have contributed to that. But whatever it was yesterday, the market did an about face today and regained over 2/3 of Wednesday's losses. Just what you want to see a bull market do. So here are the numbers. Big Seven up an average of 1.36%. RG8, this is our 8 growth ETF composite, up 1.85%. S&P strong close up 1.03%. Equal weight even better, up 1.23%. NASDAQ 100 up 1.16. Equal weight even better, up 1.43%. Dow up 9/10, mid caps up 1.4, Russell 2000 small caps up 1.7, Global 60/40 up 0.73, bonds mostly flat, so this was mostly a bounce back day for global stocks, including the US, of course. In-house GROTECTION, nice bounce compared to what happened yesterday, up 1.04%. Let's get to the charts and the tail of the tape, and we'll start off with this nice bounce off the 8-day exponential moving average, closing at the top of the range. Just what we want to see. Let's go to a 15-minute chart here and point out some key levels with our lines. So 46.55 was the high before the FOMC dovish reaction, and then the gap up. This was on a Wednesday, then the gap up on Thursday, the harsh afternoon sell-off that bottomed at 46.94, inside day on Friday, and then a melt up Monday, Tuesday, and a little over half of Wednesday before the waterfall. Now the waterfall stopped at 46.98, above the intraday shakeout the day after the FOMC. So good stuff there. Today, gap up, pulled back, really just formed a tight opening range and intraday cup and handle that we broke out of at 46.30, and a strong close. The pullback today at 47.08. So although we did breach this 47.04, that was kind of when it's a waterfall, there's a motion involved in algos firing, and if you get right back above it, you can kind of give it a break. But this key area is what we want to watch now. This 46.94 up to 47, let's call it 47.08, and this is where the markets have stopped going down after the move up after the FOMC. So this is the key level that we're going to be watching. The sell-off the day after, the pullback 2 days after, the harsh sell-off on Wednesday, and today's pullback 47.08. So here's the area where buyers are coming in. As long as buyers keep coming in at this level, the market is just fine. Regaining, I mentioned yesterday, ideal case, we just regain the 8-day exponential moving average. Worst case would have been a further move down that would have bounced at the 21, and then we'd see a rollover in the 8-day exponential moving average. And if we failed into that, that would have been the worst case scenario. But for now, that's off the table. Those levels that I just drew are what we want to watch for support on any pullback. Really, you could arguably say that Wednesday's low is the inflection point that we're trading against if we had to pick just one number. Very similar action on the NASDAQ 100. holding the 8-day exponential moving average inside day, taking back about 2/3 of yesterday's losses. Dow Jones Industrial Average taking back about 2/3 of the losses. Big cap index is all holding their 8-day exponential moving average. Mid caps still holding the 8-day, and this is just a nice now 1, 2, 3, 4, 5, 6-day consolidation that we're forming right at the top. Call it a high handle because we broke out above the pivot at 501-ish, and we're just bouncing around in there. And that's letting the moving averages catch up to price, although we're still somewhat extended from the 21 and very clearly the 50-day moving averages. But this is a nice consolidation on what we're looking to be the leading sector with the recent gap up. I mean, nowhere near coming close to the top of the FOMC close day, while the S&P 500 actually undercut that close. So again, that 200 looks like a key level. Twice we've gotten above it and failed. One day close above it, second day fail, but still holding above the 8-day exponential moving average, and in a 6-day consolidation near the top of this left side of this cup. Although we did have a cup and handle breakout here, and we're consolidating well above that. So good stuff for the indexes. The VIX was higher all day, and that was while the market was rallying. That was a little bit scary because you don't like to see the VIX doing opposite of what the market, or doing the same of what the market's doing. So with the market making digging into yesterday's losses, we made higher highs on the VIX, a little bit unnerving, but it sold off into the close as the market rallied. Still above this 21-day exponential moving average. Ideally, we want to see this get back below this level and further into the body of the candle or the bar of Wednesday's action. Let's go to the dollar. Still a broken chart here, but lower lows on the dollar, and that's good for stocks. How about gold and gold stocks? Higher for GLD. Nice day up for GDX, up 1.85%, and silver higher also. So with the dollar pulling back, the market seems to be paying more attention to the dollar than it does to interest rates now. Bitcoin taking a little bit of a break today, really tight range at the top of this 3-week base that it's forming. On to bonds now, not a lot of movement in bonds, a little bit on the long end, but the broad bond index just barely lower. TLT on the long end down 0.63%, so a little tick up on the 30-year bond. Bond yield of 0.77%, the 10-year TNX of 0.44%. Let's go to the tail of the tape. You can pause this. Something to watch, PCE inflation data Friday AM. There's an expectation that's been set now that inflation is cooled to the point to where the Fed can start considering cutting rates next year. Important that that data stays intact with what the expectation is. So we will be watching these numbers tomorrow. The day count from down 1 to up 1, back above the 8 EMA, +1 there. 35 days above the 21-day exponential moving average. 11 out of 11 sectors were down yesterday. 11 out of 11 sectors were green today, led by semiconductors and biotech on the downside, just the dollar and bond prices. What do we do in the portfolio? That SSO that we sold yesterday, bought it back right just below where we sold it at. So that was the majority of the beta back into the portfolio, and we also added to AMD. So ticked it up from 1.26 to 1.50, and the bottom line for the day is a resilient market, shows broad strength, regains over 2/3 of Wednesday's losses, exactly what we want to see. Now let's take a look at a couple of charts. Start with AMD. This has really been acting extremely well. Failed breakout on Tuesday and a close below the 8-day exponential moving average yesterday, but a big bounce back today. Below average volume, but this is the time of the year when volume is below average, but right back around that 140 level. Certainly acting stronger than NVIDIA is, but NVIDIA is holding its 8 and 21-day moving averages just fine. Let's see what we have else in the portfolio that acted pretty well today. ESTC has been a laggard lately after showing initial strength right out of the gate with the day 2 and day 3 higher highs, all the way up through day 6 before going sideways, rolling over, but reclaiming the 8-day exponential moving average today on volume higher than the prior 3 days, where we were either selling down or doing not a whole heck of a lot. So glad to see that on ESTC. Coin, it just continues. They should call it Coin Beast and not Coin Base, because it just is nonstop, continuing to ride that 8 EMA higher and didn't even touch it on the pullback yesterday. FCX, we've got a quarter position in this. This is holding up, consolidating very nicely after this big gap up last week. GitLab, a lot of these leaders that were just dripping and undercut their 8 yesterday, showing me the best case scenario, which is an immediate reclaim of the 8-day exponential moving average. And that's what we saw in pretty much all the cases of these. CrowdStrike bounced off at 250, reclaimed the 8-day exponential moving average. If you're looking at names and you found something that never even broke the 8 EMA yesterday or today, those are your leaders that by far held up best during the harsh sell-off of Wednesday afternoon and took it right back today. Some good stuff there. Kava got an upgrade today. This is an IPO that's starting to put in the right side. Nice volume patterns, up over 4% today. Let's take a look at some other things that are on our radar. Affirm, crazy stock, down 9% yesterday, took back half of that today, up 5.34%. And ARM, ARM, another semiconductor, holding that cup and handle breakout. And something tightening up and looking really good is NET, NET, closed right off the 8 EMA. Above this 80 level, this looks really good with a nice tight stop with the 21 coming up toward that 80 level. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is ready to take your call. Dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Also, like and subscribe on YouTube. We're getting a lot of followers, and really glad to hear that. But like and subscribe. The algos pick up our content and put it in other people's streams that are looking for investment ideas, and that absolutely helps us out. So we'll put the videos out there to help you out. You like and subscribe to help us out, and everything will be great. That's going to wrap it. Remember, it's not how much you make in the markets, it's how much of that you can keep. A one-day scare, they're frequent during bull markets. Escalator up, elevator down. We got one elevator down yesterday. Normally these are regained in 2 to 3 days if it's just a one-day blip, and that's what we're looking at right now. And with that, I'll wrap it for Thursday, December 21st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Just the facts here at Revere, the market facts, just what you need to know. Thanks for listening and have a great day.